Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 19th of September. All right, now this is probably the best time to be looking at the markets, right? It's just coming into the start of the Asian session. We've had a bit of time to go through the markets to ponder the FOMC decision, and then you start to see if there's any sort of currency formation. Now, let's just have a look at the whole setup here. I'll just give you a look at the main news. Now, obviously, actually, let's start on this page. Let me just show you. They've actually cut rates, but what you won't see in the whole rate cut situation is the statement, right? And this is what often the most important aspect. The rate cut, well, it was pretty much expected. They reduced the repo rate as well, and they're trying to work with some of the rules they made during the global financial crisis of 2007, 2009, the overnight repo market, okay, a little pop yesterday. So they're doing a couple of different things here. They've just lowered rates. Now, once again, this is, to me, more of a political push than anything else. Employment numbers are all right, CPI is on track, and then you start looking at the situation here. I think they've appeased, I think they thought they were going to appease Trump. He's come out and just said, they were gutless, they're killing the US economy and all sorts of stuff, right? They're actually doing a great job. But the main part is, and this is a very common question, why did the US dollar rally after they cut rates? Well, the rate cut was predominantly factored in. What wasn't was their tone afterwards, and they have signaled that they are on hold for now, once again waiting for the numbers to drop before they make the next decision. Okay, so it's a very odd situation. I mean, let me just show you the charts here. If you looked at the charts, like what's happened just here at the moment, and let me just get that pen back up. Like some of these currencies, right? Aussie dropped 40 points. It's just below the level, just trading sideways. Kiwis just dropped a little bit below. GDP numbers just dropped about 15 minutes ago, a little bit better than expected. But you look at the currency, and I'm talking about the general volatility around in particular, last 3 hours. Okay, there hasn't been hardly any at all. And if I told you in this situation that the Fed had just cut rates, you would be completely blown away and going, "You've got to be kidding me." So it's what we've got is the market. We've been waiting for some sort of clear direction. We didn't really get anything out of the Fed. We got the cut. Think it would keep Trump happy. No good. But you got a few of these pairs like dollar CAD now sort of just trading up towards that sort of pretty weak resistance line. So a lot of these, I was saying this yesterday, like a lot of the technical levels, let me just clear the screens. The technical levels are really short term and they're not exactly really thick, as in solid. Dollar yen's got a much better structure. Now, all that kerfuffle around Saudi Arabia has sort of, dropped to the wayside. So what we're seeing now is the currencies, they're sort of, once again, it's like being starved of oxygen. They need direction from the central banks. They're not getting it. They're like, Fed's wait and hold. So they're back to a neutral stance, even though they cut rates. The ECB last week, did a bit of extra QE and then was so upbeat, but that's actually the market's called their bluff there and said, you guys are going to be kidding yourselves if that's going to help. So that's where we are. Now, this big gap in oil, it's slowly coming back. Now, there's no rules about when the gaps are filled on these situations, but that move back up in oil is putting upward pressure on dollar CAD. And when you have a look at the overall, inflation numbers, okay, if I just bring you back to the data page, have a look at these Canadian inflation numbers, okay, a little bit soft, but right on expectations. If anything, the year on year is slightly weaker, and that supports a higher dollar CAD as well. So higher dollar CAD, lower oil prices should see dollar CAD squeeze to the top side. But what I was showing you is it's not an easy trade. You can see the price action here. It's very indicative of a market that just doesn't have faith in what's going on at the moment, right? And that's because we don't have any sort of direction across the board from any of the central banks. Really, even if I bring you back to the MyFX Trading Hub, right, and we have a look at where everything is, We still, to me, I probably need to update the ECB to say neutral, even though they cut rates, primarily because the wrong page. They have sort of said, they're going to do whatever it takes. That could probably go back to neutral, but this thing's drifting lower. Then you look at the situation with, say, sterling. It's going up. And it's against the sort of trend of everything else, but you know what? That's Brexit. So it makes sterling a little bit too hard to call when you've got these unpredictable events. Aussie and Kiwi, well, you know what? They're getting a little bit diffused with local data and also with that sort of lack of any clear direction from the Fed. Now, what have we got to look forward to over the next 24 hours? Now, this is where you're going to focus, right? The upcoming events. This is where momentum can come from. The Aussie employment numbers, now this is a really beefy number, right? You've got the unemployment rate, the employment change, and the participation rate. There's a bit of a breakdown of full-time, part-time as well. This is a number that can give the Aussie clear momentum, even if it's short-term. So you might want to have a look at that. Then we've got the Swiss National Bank coming up, UK retail sales, which will definitely be overshadowed by the Bank of England. We'll have to wait and see what these guys have got. And then you've got the Philly Fed Manufacturing Index as well. So there's a lot of information coming out over the next, 24 hours. Okay, as I said, the employment numbers here for the Aussie, important. Now, for those traders who aren't aware, and most of the traders who haven't been doing this for a long time, the full-time employment number is a very important structural number. A big number here and say a slightly weaker employment number will see the Aussie rally. Okay, but weaker numbers across the board, everything goes down, and better numbers, it goes up. Don't forget, the RBA has been focusing on the employment number. If employment starts to fall, they are very concerned they will potentially start to change their wording to, we're going to have to cut again, right? Especially after the Fed. The Fed cuts rates, everyone has to keep up with what's going on. And to me, this is the weird thing, right? So the US economy is the strongest globally at the moment. They're cutting rates. Well, that's a little bit of an odd one. So when we come down to having a look at what's coming out in the European session in particular, no change expected from the Swiss National Bank. You come into retail sales, but you know what? That's going to be superseded by the big event in the in the UK, which is obviously around the central bank. If I can just get that lined up. Okay, you're looking at there's a couple of different things. Vote count. They're not expecting any change. So if there is a change in the vote count, that can be the catalyst for a move. No change in rates or anything else for that matter. And it's not surprising, right? We've got Brexit still waiting there. They don't know if they're going to be out of the EU at the end of October or not. So it's pretty hard for the central bank to start sort of making up policy to manage conditions when they don't really know what the hell is going on. So that's where we are. And that's very indicative of the global markets at the moment. We are sort of being dictated to by the core market drivers, which are geopolitical. This Saudi Arabia issue has been pushed aside, right? It's like a major thing. It's all settled down, but just keep an eye on that. It could escalate. Brexit, obviously, and the US-China situation. Now, Trump did mention yesterday, I think it was, that this may come into play as an election policy, right? Which means he'll try and drag that out to the next year's elections in the US to use it as leverage, really push China to the brink to make all his voters who are voting for Make America Great Again, get on that sort of bandwagon. But we've got normal liquidity, calm markets. We just don't have very much clear direction across the analysis, right? So what that means is you're probably looking for shorter term trading opportunities, and that's where the upcoming events come into play. All right, guys, a little bit long-winded from me today, but probably needs to be after the FOMC and the lack of clear movement across the currencies. I hope that helps. Have a good trading day. Cheerio.